What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Monday, February 26th. Well, you guys, the S&P 500 SPY here today on Friday finished the day just about flat, up 35 cents a share, 7.07%. So let's take a look here at levels to watch and any bias that we can pull out from all the data that we have here today, starting with the 1 minute chart. If you guys like me covering SPY here on a daily basis, I have been covering it every single day, and I will continue to do so as long as I get the feedback that this is a name that you guys are interested in me covering each and every day. Just let me know down in the comment section. I also do have a goal. I'm trying to hit 2,000 subscribers in the next 7 days or so, which at the pace that we're growing at, I think is certainly doable, but only with your help. So I appreciate you guys subscribing. Let's jump in. So listen here, as far as after hours movement, we are down. We closed on that relatively large red candle, so it's a little bit deceiving here. We actually closed down here at around 507.85. Okay, and the ETF, the market really itself, down about 0.15% after hours. Not a tremendous move at all for the market. Also, you see how choppy those candles are? We have quite a bit of neutral candles. Look here. That's why. Volume is very low. Take it with a grain of salt, okay? As far as intraday opportunity here on SPY, actually not all that much. I did send out a scalp alert on the Qs today, a name that I like to scalp quite often, sometimes with shares, but a lot of times actually utilizing options as my scalping vehicle just because they're so incredibly liquid. But let's now move on to a day-to-day mentality rather than an intraday mentality and take a look at the 5 minute chart here on SPY for any volume, obvious things that happen in the volume profile. So first of all, I'm looking at this dump off. Did we see a huge increase in volume? Not really, actually, which is interesting. But if we look here, we did get a lot of volume on the close here, as we had that bigger red candle. So bulls, just be aware that you are going to have some bears looking at this, and they're going to be gloating about that, right? The bears are going to look at that and say, look at that, right into the close, tons of volume on a relatively large couple, or three really, red candles, okay? Bulls, just understand that. Again, this is one factor of many, but we have to look at them all. Okay, now let's move on here to the self-fulfilling prophecy psychological levels to watch as we head into Monday here. Okay, so this is the 30-minute chart, and we're looking at the most popular levels, the most popular indicators. The only reason I care, right, is not because they're popular indicators, but kind of because they're popular. I care because there's a lot of eyeballs on them. Self-fulfilling prophecies. Okay, you hear me say that all the time. That's truly what I believe, in this channel is all about charts. It's all about TA. It's all about pulling out the bias, and that's what I believe. That's the only way I would want it, by the way. So here on the 30-minute chart, you can see that white line is the 50-period moving average. That is the most immediately relevant level here. So from a bullish perspective, what I'm looking at here come Monday, I would ideally like to see a reclaim of that level. We're currently at less than 0.2% away, so that is obviously well within range for a single-day move on SPY. I'd like to see a reclaim of that and a hold as support because we did give that up into the close here today. Bears, for you looking at this 30-minute chart here, you would not only want to see the 50 period actually continue to flatten out and actually curl downside, but you'd of course want to see a continuation fade of the actual ETF downside here. Any tests, you'd want to see big rejections off of that 50 period, helping that psychological barrier, right? Allowing or helping more so a little bit on this 30-minute chart to be particular, push the ETF or the whole market, right, from a psychological view down toward that 200 period. All right, let's move on now to the 4-hour chart and take a look here. Now, you can see that we currently find ourselves about 1.36% away from a downside test of that 50 period. So that's a bigger intraday move, but we have seen, we recently saw a 2% day on SPY. So it's within range, but that is a more volatile day for the overall market. Just keep that in mind. But bulls, really, ideally here, we wouldn't really want to see a retest because we're kind of backtracking a little bit far, all the way down to 500. I think ideally what I would want to see is just a curl upside in this 50 period getting it upside, up underneath the ETF, up underneath the move as quickly as possible. Bears, you would really want to see this 50 period flatten out as much as possible and allow that gap to stay as large as possible. Start getting into some bulls' heads like, hey, you know, we're kind of floating on air, at least on the 4 hour, maybe fade back here a little bit. That's what you'd be looking for as a bear come Monday. All right. Now, the most important chart of all here on the market, the daily. You can see here we did hit an all-time high. Now, if we look at SPX, which is SPY, just for context here, all-time high here on SPY today. Okay. Now back to SPY on SPX, on the S&P, sorry, all-time high, and of course also on SPY, just an ETF that represents the S&P. Though if you're here, you're obviously probably well aware. So on the daily, what is the most obvious story? I mean, for me, that's really always the question. Okay. The most obvious story here for me, if I'm a bull, is 510. I mean, really, come Monday, I want to see a push into another all-time high, but really just claim that round number of 510 as a support level. You know, the shorter time frame you go, the more specific you can get with the round numbers acting as psychological levels. It doesn't always have to be about just 500. If we're looking at a day-to-day perspective, 510 is more than relevant. So bulls, come Monday, going to want to see us get back above 510 ideally. Claim that as a support level. That'd be a beautiful thing to see. Bears, 510 is kind of your enemy right now, right? Reject hard or continue downside back down toward 500 because what's your ultimate goal? Get back below 500. Now, let's take a look at what was the call put bias here in the options chain today on SPY. Big sample size, right? I mean, anything over 10 million on SPY is really a lot of volume, but 8.7 million total contracts traded here today. That's still a substantial volume. We can get good data out of that. 4.03 million calls, 4.67 million puts. So while it's not, it's not overwhelming, but we are seeing a slight put side bias here from Friday. All right. Now, the 0 to 20 delta range, what is that, right? That's the short term on average. The short term speculators, the short term gambly, out of the money, right? Typically short dated calls and puts. Okay. This delta range is going to have a much shorter on average bet intention compared to the deeper, the at the money and the deeper in the money contracts. So in the 0 to 20 delta range, 1.03 million calls, 1.93 million puts. We're seeing the short-term speculators betting bearish still here, betting on potentially a return back down toward $500 a share here on SPY, really 5,000 on the S&P. Okay. Now, as you get deeper in the money, again, as is typical on SPY, again, because this is the longer term sentiment, right? As you get deeper in the money, it typically tends to lean bullish. We've actually seen it flip bearish, which was interesting recently, but it tends to lean bullish because, the S&P in the mid to longer term is going to tend to have a bullish sentiment. Listen, I hope that helps. If you guys got value out of this video, please subscribe to the channel. I appreciate it, and I'll see you in the next one.